Hello friends. Welcome back to the Intelligent Mindset. I want to talk about early retirement today, like how you can earn passive income from the stock market and achieve early financial freedom in life, and I can guarantee you that by the end of this video, you will be so motivated and excited about your journey to financial freedom. I am going to tell you many interesting things that you can't learn from your parents or at school, so watch the video until the end. So let's begin. So friends, meet Anne Schreiber. She was born in the USA in 1893. At that time there was so much racism in the USA, and black people and females didn't get proper rights. So Anne Schreiber got a job in the USA tax department, but despite of work and talent she never got any promotion. So she did a very basic level job as a helper her whole life, and her salary was never reached beyond $3,000. So basically, Anne struggled emotionally and financially her whole life. Because she didn't have any parents and she never got married. Because she worked in the income tax department, that's why she read the tax report of a lot of rich people, and by that, she got to know why rich people are so rich and what's the secret to becoming rich, and the same thing I am going to tell you in this video. At that time mutual funds weren't common in the USA, index funds weren't even invented, and there were no such thing as pension plans for employees. So that's why when Anne Schreiber retired at the age of 51 she didn't have much savings. According to some reports we can estimate that she only saved $5,000 to $10,000 for her retirement. This means she only saves her 1 to 2 years of salary. But despite that, she learned a valuable thing in life and reached a special position in life that you can't even imagine. When Anne Schreiber died at the age of 101 years, and at that time her net worth was $22 million, and that's a lot of money from anything to the 1990s. In her will, she wants to donate all of her money to some female educational charities because she didn't want the underprivileged women will struggle the same way as her in the future. At that time the whole media and a lot of people got a huge shock because she didn't win a lottery or she got any rich relative that might have her such huge amount as inheritance. Then where did she get all of her money? So friends, according to the investigation, she gets all of her money by investing in stocks and with the help of compounding. She started it all with only $5,000 after her retirement. So friends, when she looks at the tax reports of rich people she finds out that rich people had some cash flow producing assets like stocks, real estate, or any private business by which they get passive income without doing any work. And after learning this thing, Anne got a very special feeling because she never learned anything like that in school, and neither did her parents tell her anything about it. And because she didn't have a lot of money she couldn't buy any real estate and neither start a business. So that's why she started investing in stocks. She learned that rich people hold their cash flow producing assets for the long term and let it compound and enjoy its cash flow, due that they should pay less capital gains. And who else can know that better than Anne? After all, she worked her whole life at the income tax department. After investigating her investment strategies, we find out she uses a typical passive investment strategy, means buy and hold strategy. Means no trading, no fancy investments, no options, and no commodities. She only bought good quality stocks and held them for a long time, and she only used her dividends to meet her daily needs and reinvest her remaining cash. Because of that she gets income, but her wealth was also growing. Because friends, if we calculate how much rate her money grows, then you will get a shock, because her money was only increased with 15 to 18%. And if we make a rough estimate, then we find out that in the first 10 years after retirement, her portfolio had been grown to just $30,000 to $40,000. But in the next 10 years, in 1964, her wealth must have grown to $200,000 to $250,000, and her dividend income must have been around $8,000. This means she had been getting her initial investment as a passive income each year. And in 1974 her portfolio was around $14 to $15 lakh and her dividend income must have been around $50,000. In 1984 her wealth must have been grown to $4 to $5 million and in 1994 her portfolio grown to $22 million and she donated get whole money and according to USA tax law at that time her income didn't got any taxes, and all of the $22 million goes to charity. And friends, with this you must have gotten a hint about how rich people become more and more rich with time and how they save their taxes, and we will cover this topic in future interesting videos. So friends, a lot of people say that what's the point of getting so rich in old age when you don't have enough energy to enjoy your money? But if you notice, then you find out that she started investing at the age of 51, and if she had started investing at an early age, then she might have been one of the most famous investors of all time and must have achieved financial freedom at an early stage of life. But the problem was that she had no one to teach her, and at the time there was no such thing as YouTube. But despite that, if she didn't start investing at the age of 50, then you can imagine how hard will be her second half of life, means the age of 50 to 100 years. She had to struggle so much in the second half of her life that she didn't start investing because she couldn't even do a job at that time. So friends, what we learn from this real-life example is that if you are smart, then nothing matters, like what's going on in the world, how bad people treat you, what is going on in your office, or whether you get a promotion or not. These things don't matter. The only thing that matters is what induces your mind and how is your mindset. And if your mindset is good, then you get what you deserve. So a lot of people overthink that they are 30 or 40 and they haven't invested anything yet, or they are late in investing. Then you can learn a most important lesson from this story: it is never too late to start. You may live until 80 to 90 years. So will you want to live as a liability on someone at that age, or will you want to live as a respectful and independent person? The choice is yours. And if you start investing in your early 20s, then you can easily get retirement at the age of 30 to 40. You can treat your future as your child. It's just like parents invest in their children they should also invest in their retirement fund, such as an index fund, and if you keep doing investments for 15 to 20 years, then you can retire early without being dependent on anyone. That's why if you invest in equities, you should think long term, because everything takes time to grow, whether it's a tree, your child, or your money. If you can do a job for 40 years that you don't even like, then you can also do investing for 15 to 20 years for your financial freedom. Because salary normally grows at a 10% rate and you only get it when you do a job and you are healthy, but your passive income grows by 15 to 18%, and the best thing is that it will grow without working out if you are not healthy or relaxing on a beach. So that's why after some years your passive income can grow exponentially. There is no subject like financial education in school, and that's why I started this YouTube channel to tell you such valuable lessons. Nowadays it is so easy to buy stocks by just sitting at home, but in the age of Anne Schreiber, people should have so to broker office to buy stocks and also give some commissions to the broker. And if you don't have any knowledge of investment, then you can easily invest in index funds or mutual funds. So friends, that's it for today's video. If you learn anything from this video, kindly hit the subscribe button and press the bell icon so that whenever a video comes out you get a notification. Thanks for watching.